What's up, guys, and welcome back to the channel. Today I wanted to go over what I think is one of the most important things you should be looking at before you decide to invest in any company. Now, besides the product or service that a company is offering, we have to understand the health and the status of a company. The best way to get insight into how a company is doing is going to be through their SEC filings and through their financials. At the end of the day, we are investors, and when investing in companies, we do want to see some return on our investment, right? So one of the very good indicators to how a company is doing is to look at their financial statements. Understanding the financials of a company is going to help you reinforce your own thesis for that company, and generally a healthy financial position means that it's going to be a lot easier for them to eventually meet their goals. And for example, with stocks like Tesla, they've been around for a while and they're starting to ramp up production while cutting costs dramatically. Whereas a company like Nano, they're not really in the business of, generating profits yet. They're trying to scale out their business and develop new products. So we want to see things like, top line growth, but we also want to see a lot of research and development. For more mature companies and companies with a long track record, we just want to see a lot of profitability. We do want to see some growth, but we do want to see that they're able to retain a lot of money. And the retained earnings in these companies can eventually be distributed among shareholders or even reinvested back into the company for whatever reason. With that being said, I just want to show you guys what you should be looking for in financial statements, depending on the company you're looking at. You already know I'm going to pull up NanoDimension's financial statements just because I talk about them so much on this channel. So generally, it is a very good idea to start on the annual financials just because you get a larger scope of things. Similar to when you look at a stock technical chart, you want to look at the higher time frames and slowly zoom in. Same thing for financial statements. This will give you a general idea of where the company was headed. We can see in 2015, the year of their conception, there were no sales. All we had were cost of goods sold and a whole bunch of R&D, which is good because, they're trying to develop a product. 2016, we see some sales materializing. This is when they released their Dragonfly 2020 desktop printer. This is the one that looks like a Lamborghini. I think that's where the inspiration came from for that design. We can see down here that their research and development cost from the previous year went up. 2017, we see even more sales growth. Cost of goods sold also went up though, disproportionately compared to the last year even. So the next thing you do is analyze and say, well, why would the cost go up like that? So if we go down 2 lines, we'll see that the cost of goods sold, excluding depreciation and amortization expense, is going to be $1.2 million. So I think in this case, they could have done it for, I believe, tax purposes. I think that's what these major corporations do, is they do it for tax, but I could be wrong. In this regard, I am kind of a rookie, I would say, but I know there are tax implications for depreciation for the most part. Now, for the next year, going into 2018, we see a substantial growth in NanoDimension's sales. It went from 835,000 all the way to 5.08 million or 5,080,000. Now, when you see revenues and cost of goods sold rising year over year, the next best thing to look at is going to be the gross profit margin of these sales. So let's start from 2016. We're going to get 2016 top line revenues. Let me zoom in just so it's a little bit easier to read. So let's start from 2016, their first year of actual sales, and divide that by 371,000. And we will see that we have a gross profit margin of 0.12%. So what this tells you is that for every dollar the company is spending in producing these goods, they are only getting around 12 cents back. So yes, on the surface, this looks really bad, but this is why we have to look through time just to see if things in the company are improving and gross margins are getting better. So let's go to the year 2017. We're going to get 835,000. So compared to the last year with only about 12 cents for every dollar they spent on producing the goods, they are now seeing 51 cents for every dollar they're spending on producing the goods. So compared to the previous year, this is an improvement. 2018 was 5,080,000 in sales, divided by 5.4 million in cost of goods sold. They are now getting 94 cents back for every dollar they're spending on cost of goods sold. Again, improvement from the prior year. We started with 12 cents up to 51 cents. Now we're at 94 cents. So now let's look at last year, 2019. And we'll see that we have actually achieved the first profitable year in NanoDimension. This is the first year that they were able to actually produce more revenue from the cost of goods sold to produce these goods. So we went from 12 cents to 51 cents to 94 cents to $1.02. So this is a very good sign that the company is doing things to increase efficiencies in their sales. Now we have to remember that the revenue and the cost of goods sold is not the only part of reading a financial statement. There's a whole bunch of other pieces in a financial statement that you want to consider, but this is just the bread and butter of the company. Are they making sales and are they doing it efficiently? So the next thing to look at in financial statements is figuring out how the company is spending their money. We want to see, is the company spending a majority of their money in, just paying leadership and employees, or are they actually reinvesting into the business, doing research and development, and, coming up with better products to eventually produce more top line revenue. So starting in 2015, we had $5.72 million. This money likely came from the IPO and the public offering. 2.8 million went into research and development, and another 2.8 million went into selling and general administrative expenses. So for 2016, we increased our selling, general, and administrative expenses, including research and development, by looks like a little over $3 million. So how was this money distributed? And we increased our SGA expenses by a little over $2 million. When you see stuff like this, that's when you would start to question, like, all right, what are they doing? Were they issuing more options and warrants for leadership, stock-based compensation for employees? It could literally be anything. So from 2016 to 2017, year over year, we see that their SGA expense pretty much doubled. Now, what I really like to see here is the fact that out of this 16 million, this close to $11 million is almost 3 million more than all of the expenses they did the prior year. 2017 is also the year the Dragonfly Pro came out, so I think this has a lot to do with research and development for that. SGA went up a little bit, no big deal. So 2018, SGA expense actually went down, R&D went down, and selling, general, and administrative expenses went up. Now remember, this isn't the only part of the income statement. All we have to do is scroll up. So if we go up to 2018, we'll see that this is their first year of actual substantial sales. So it's likely that these sales did contribute to other selling, general, and administrative expenses that prior just weren't there yet. So I think as sales go up, we are going to see these indirect costs go up as well. We'll see that sales and revenue went up. Cost of goods sold went up, but now they're profitable. We'll go down. We'll see 2019 SGA expense also up. R&D also up. SGA also up. So overall, this isn't an unhealthy trend for the company. The point I want to make here too, specifically with Nano Dimension, when looking at financials for a growth company like Nano Dimension, we want to look at a lot of research and development expenses. Because if it is going to be a company that's disruptive and innovative, how are they going to disrupt and innovate if they're not spending any money on creating new products? So keep that in mind when you're investing in companies with new technologies and in the process of growing. The next thing is going to be the balance sheet. Now, the next thing we're going to be looking at is the balance sheet. So unlike the income statement, the balance sheet is just a still frame of the company at a particular point in time. Just remember that all the previous year's balance sheets do not impact this year's balance sheet. The most recent one is the one that matters. But it doesn't mean you should ignore the old ones. The old ones can give you insight of how they were spending their money earlier in the game. And let's say with the balance sheet from 2015, you could just compare how things have changed up until around now. So from 2015 to 2016, we'll see that their cash increased from 8 million to 12 million. Accounts receivable increased from 264 to 457. Accounts receivable is just money that they're expecting to receive, but they just haven't received it yet. This could be printers that they sold that they haven't gotten paid for yet, and they're owed the money, so this still counts as an asset towards them. Unlike the income statement, I like to go straight down on a balance sheet. The reason for this is because I like to compare the assets of the company with the liabilities of the company. So our current assets, which are generally more liquid assets, are going to be $9 million. This $9 million is a majority of their $13.25 million in total assets. So what this means is that they have a lot more access to quick capital and things that they could easily convert to cash. Now let's compare the total assets towards the total liabilities. So we had $13.25 million in assets, and we had only $910,000 in liabilities. So if we're to compare our total liabilities to just the current assets, we can see that Nano Dimension had 10 times their total liabilities in 2015. Now let's fast forward to a quarterly balance sheet. This is going to give us the most accurate and recent, at least, data. This will give us the most current position of how Nano Dimension, or any company for that matter, is doing in terms of their financial position. So we'll see Q3 2020, the most recent earnings report. They had 37 million in cash. I want to bring up real quick that it's very important to read these filings and keep up with the companies you're invested in, because if you did, you would know that Nano Dimension has a lot more cash than $37 million right now. They just raised $150 million. So right now they're probably sitting close to $140, $150 million in cash. So let's compare this to the last year. We'll see that in 2019, to end the year, they had about $4 million in cash, but they had but they had 10 million in debt. Now in Q3 of 2020, they're going to have around $150 million in cash. And on this balance sheet, it says they have 9.69 million. But if I'm not mistaken, they're going to have no debt because I believe they're just going to pay it all off. So for example, had you watched the Red Chip Money Report with Yoav Stern and Steve Gentry, in the interview, Yoav Stern mentions that they paid off all their debt. So they had a lot of cash and they covered all their debt. So chances are it's still that way and they have no debt and a lot of cash. Now, the main takeaway in this video I wanted you guys to have is to really understand the financial situation of the companies that you're investing in, because in these reports and filings and presentations, whatever, they can say whatever they want. But when it comes to financials, the money doesn't lie. You have to figure out what exactly they're doing to get the money up in the company and eventually reward its investors. Because at the end of the day, that's what we are, is we're investors. And if we want to be successful investors, we have to invest in companies that are in a really strong financial position, have a really compelling product, and have a really well-defined roadmap. And if we could put all these things together, then we'll have a really solid thesis for where we see this company going in the future. So this is just one of the things that you should be looking at. You absolutely do not just want to be looking at the charts, because the charts are not what tells you if a company is overvalued or not. It's going to be in their financials. So just imagining you're by yourself and YouTube didn't exist and you had to fend for yourself and figure out if an investment is good, this is the way you can do it. The more you look at them, the easier it is to pinpoint things that are kind of weird or things that you might be able to question. Generally, I like to see a lot of cash versus liabilities. It just means the company is going to be in a lot better position to inject cash into the company wherever it needs cash. Now, reading financial statements is going to be different for different companies. Specifically for Nano Dimension, I think their balance sheet looks very good considering the position they're in. They're in a timeline of growing right now and expanding their business and products. So it makes sense that they're, holding on to a lot of cash and spending a lot in research and development. Even a company like Tesla should look something similar to this, but they're a lot more seasoned, and it does make sense for them to start making at least a little bit of money now. But for the most part, they're still interested in growing, so that's just an example there. I also just wanted to make a point that you absolutely cannot be lazy when it comes to investing, because if you are lazy, you're just going to follow what everyone else is doing, and chances are they don't do half the work that you should be doing when it comes to investing in companies. So do your work, guys. Do your research. Look into these companies really analytically. The things that stress you out about the companies you're not confident in is really just a question away from you figuring out what is wrong. And really, the more things that you have answers to as opposed to just having questions, you'll feel a lot better investing in these companies. So I highly recommend that if you are investing, you need to look at financial statements. I believe right now we're in the midst of a super crazy stock market boom that no one really sees. I think the market is just super scared from like 2008 and the dot-com bubble in 2001. We will start seeing new all-time highs, and the ones that survive are going to be the companies with really strong financial statements and a really good position to grow for the long term. So definitely don't sleep on financial statements, guys. But anyways, guys, that's it for this video. Thank you guys for watching and making it this far into the video. If you liked what you're watching, all I ask is you hit that like button. And if you do find yourself coming back to my channel more, you should even consider subscribing. And don't forget to hit the bell notification to get notified when I make videos just like this one. Anyways, that's it for this video, guys. Thank you so much for watching, and I'll see you in the next video.